There's a massive business of scalping ETFs. And this didn't just start yesterday. This goes on every single day. There are firms like AQR and others. They have entire quant groups, and Millennium and a bunch of the big hedge funds, Renaissance, they do this all day. So there were a lot of people who were shorting Bitcoin and buying, the ETF, or shorting the ETFs and buying Bitcoin, or shorting BITO and buying, FBTC. I mean, the amount of arbitrage that goes on, and part of it is because of the unique ways they trade, right? ETFs trade literally the last minute of the day, right? They don't actually trade all day. They actually do their buying and selling the last minute of the day. And so there's a whole bunch of stuff that's going on.
Welcome back to Money 101. Mark Yusko provides insights into the complex realm of ETF scalping, an entrenched practice within financial markets. Employed by major entities such as AQR and Renaissance, this strategy revolves around capitalizing on the distinctive trading characteristics of ETFs, particularly their end-of-day trading patterns. The implications of these tactics extend beyond traditional markets, significantly impacting the evolving landscape of cryptocurrencies. With the SEC's historic approval of Bitcoin ETFs, we stand at a crucial juncture. This momentous decision, a long-anticipated milestone, is poised to reshape the dynamics between digital and traditional finance. Stay updated with the latest in the crypto world by subscribing and liking for ongoing insights.
BlackRock thought they were going to start around 80. And BlackRock's first salvo into the war was 30. So somebody thought better of it, and they got all the way down to 30. And then there were multiple revisions over the last couple days, and BlackRock got, I think, down to 25, I think it's 25. Bitwise is 20. And I think that's number one. Then someone else is 21 or 22. And then I thought BlackRock was 25. But anyway, they won the race to have the lowest fee, because at the end of the day, what financial advisors want is the lowest fee ETF.
Second place on the chart here, we've got FBTC. So that is the Fidelity ETF. Not a huge surprise there, but we got IBIT in third with and by the way, the numbers here on the actual flows are, so for Bitwise, BITB, 237.9 million. Fidelity was right behind with 227 million, and then IBIT is 111. So sort of just, and then it trails off after there. ARC B is 65.
But then again, there's a reason it played out like this. I mean, there's an absolute reason it played out like this. Work. Who did the work? So BlackRock, okay, they announced in June they were coming in, and Larry went on TV a couple times. But they didn't go out and educate financial advisors. They didn't go out and sit with individual financial advisors in Topeka, Kansas, or Seattle, Washington, and tell them this is what you do, this is how you do it. Hunter said this yesterday. He said they did 20,000 meetings last year. 20,000 meetings with financial advisors to get them. And again, they have BITW and others, but 20,000 meetings educating. And so it's not because look, that number for IBIT is going to go to the moon. It's going to be the biggest one. It's going to be monstrous, because the sovereign wealths and all the other people that are part of the network are going to support, King Larry et al. So yeah, it's not going to surprise me that IBIT becomes the biggest, like iShares are the biggest in everything. Fine. Fidelity isn't surprising in the sense that Fidelity, because of Abby and their great team, they have an amazing digital team led by Tom. I mean, they're awesome. They also educated their clientele, and those clients, both Bitwise's and Fidelity's clients, were ready on day one. Everybody else is hoping that the people who had their heads in the sand, the UBSs and the Merrill Lynches and and the Raymond James and all these other people said, no, no, no crypto, finally say, yep. And we got a little taste last night, sadly, where Vanguard and Bank of America, Merrill Lynch said, nope, we're solid with Ms. Warren, and we're not going to allow this speculative asset. That will change. I'll give it 1 week. 1 week, Vanguard changes their tune when they start seeing the amount of people who set sail. That was my little hashtag last night. Just set sail, just leave. So that Bitwise number is going to grow because they did the work, they planted the seeds. And Fidelity, how many people are going to transfer from Vanguard to Fidelity today? 1,000? 5,000? 10,000? It's going to be a big number. Big. Right, that's going to be a big number. I got a tweet, and I love Twitter. I mean, I love Twitter. The people I meet with real expertise, like on the front lines, they might have 7 followers, but they're really interesting people, and it's just so cool. But this guy tweets at me last night that actually he wasn't even tweeting at me. I just came into my feed, and he said, I can confirm that these brokerage firms don't get it, right? I'm at this firm, they have $1 trillion of assets, and they will not let me buy this for my clients, even though my clients are asking. So in some places, they'll let you sign a waiver. They'll make you sign a waiver for triple levered inverse, but you got to sign a waiver for this. Because I can't do it. And I just sent him back some stuff saying, look, thanks for your vision. He's this young guy. He and his wife in this great picture on his PFP. I said, just thank you for your commitment and your vision. Patience is a virtue, and this too shall pass, and it'll all work out. He's like, yeah, I hear you, but I don't know. Maybe it's time to go find a new home. And I think people don't understand how important these decisions really are. And but my point there was that he said in this tweet, they told him it was going to be 3 months, that they had to wait 3 months to see if the liquidity was adequate. And I'm like, okay, that is a relic, literally, that is a relic of 10, 15 years ago when most of the money was in mutual funds, and you really did need to see if enough money was going to come in the mutual fund to make it efficacious because the fees were high. Today, we know in real time that there was plenty of liquidity in these products. Like it set records if you put them all together. Okay? And I do find it awesome that the crypto ETF, ETP, beat the number one previously, which was an ESG EFT. I love that.
The green light from the SEC for Bitcoin ETFs heralds a transformative chapter in finance, seamlessly intertwining the novel realm of digital assets with conventional investment instruments. It transcends mere market expansion. It lays the foundation for education and active participation. Pioneering this movement are industry giants like BlackRock and Fidelity, yet this is merely the inception. The financial landscape of tomorrow weaves together digital and traditional elements, an ever-evolving tapestry teeming with prospects. For a deeper dive into unexplored financial territories, don't forget to subscribe and like. Stay tuned as we delve further into the realms of finance in our next exploration.